Well, I'm back already. I just realized it is 8:15. I lost track of time. I didn't realize it was so close to start time. This isn't my start time, and I don't want to delay much further for two reasons. Number one, there's already a decent crowd here. And number two, the news is out in 15 minutes, and I'll be hard-pressed just to cover the material that I want to cover in the next 15 minutes. So first of all, let me dispense with the usual early webinar stuff. First of all, thank you for attending, and thanks especially to FX Street for making this event possible, for inviting me to cover this particular event, the release of the first quarter 2013 US GDP report. Let me first remind you that the purpose of this event is education, informational. I'm not going to provide any specific trade alerts or recommendations. I'm not going to say buy here or sell there. I'll cover some price action, and we'll discuss some possibilities, if any reasonable ones materialize, of a prospective trade, however. So with that, let's take a look at the view you see here. You see four separate 15-minute charts, four separate currency pairs. These charts are without indicators for a reason. Yes, indicators could come. When I refer to indicators, I'm talking about lines that many of you have on your charts, such as moving averages, pivot points. We'll get to those in a moment, but I like to start, especially when it comes to assessing price before and after the release of news. I like to assess chart indicators to really get a really good sense of perspective levels of visual support and resistance. For example, look at the Euro USD here. I'm expanding the 15-minute chart for the Euro USD. Pretty reasonable to assume at the 1.30 level is, or I should really usually refer to it as a 1.30 zone. Pretty reasonable to assume the 1.30 zone is support. Our horizontal blue line represents 1.30. You can see yesterday the euro briefly breached 1.30, but since then the area has held up. And of course that's no real surprise. The 1.30 has shown a long history of affecting price action on this currency. I can even recall back at least as far back as first quarter, or actually part of second quarter of last year as well. Parts of first and second quarter last year, there's like a 3-month period early last year where the 1.30 zone was a tough nut to crack. So there's support. So to keep in mind, near-term resistance in the case and we see a rise in the Euro USD in response to this report, which in my assessment is probably unlikely. There's resistance around 130.45. Now, what does that mean? Well, in terms of why would I even identify resistance? Well, one trade plan, I'm not going to explicitly endorse it, but one prospective trade plan in response to reports to a report like this is to fade the news. For example, let me shift this chart over. Zoom back out a little bit. Here we go. What move I've seen in response to reports like this? You get an initial rise. The rise may occur over 5 or maybe 15 minutes. A rise to prospective resistance, and after that, the trade for the sim you may undertake could be to fade the initial post-news move. In this case, if it's a rise, you may look to short the euro somewhere along 1.3045. Again, may not be the only possibility. I do see some price action closer to 1.3020, 1.3025. High there, low there. Price got hung up there as well. So, maybe we get one of those. It would not surprise me. And one reason, specifically a reason why I suspect fading, if you choose to do so. By the way, it's not an easy trade to take. It is not easy to say short the Euro USD when the initial so-called knee-jerk reaction is up on the euro in response to a U.S. report. However, I can't tell you in reviewing the Euro USD's response to recent U.S. GDP releases, Euro USD has not responded that well. In fact, looking back over, and as I recall, the past several years of responses on the Euro US GDP report really hasn't moved the needle that much in terms of affecting the major currency pairs. The Euro USD, with the exception of, I believe, 2011 and parts of 2012, the GDP has not moved this Euro US that much. Now, one of the more sensitive currency pairs to this U.S. GDP report, and in fact, it's the currency pair seemingly most sensitive to U.S. reports, period. That would be the dollar-yen currency pair. I think I have one more check. Sound check, testing 1, 3. I've been yapping up a storm. Okay, I just want to make sure that because I saw another comment there about someone couldn't hear me. So yeah, dollar-yen. Dollar-yen's been one of the more sensitive currency pairs to U.S. news, specifically U.S. GDP. But even its response of late has been sort of a mixed or muted. Let me show you some examples here. I'm digging up an image of the dollar-yen response to the last advanced release of U.S. GDP. Now, let me explain what I'm showing you here in the next 3 slides, 3 images. I'm not looking at the response to last month's U.S. GDP report because it was the third estimate of fourth quarter GDP for last year. So U.S. was released each month. However, not all releases are the same. The U.S. the Bureau of Economic Analysis is kind of weird in this way. They will release, the Bureau of Economic Analysis, who compiles the U.S. GDP report, they release 3 estimates in 3 successive months for each given quarter. So, for example, for fourth quarter of last year, they released their first estimate of fourth quarter GDP on January 30th. You see the dollar-yen's response to that report. There was a second estimate for fourth quarter GDP was released in late February. A third and final estimate for fourth quarter GDP was released in late March. I'm focusing on the dollar-yen's response to first or advanced estimate for quarterly GDP in the U.S. For the past 3 quarters, not first quarter this year, which we're going to see in a few minutes, but for the 3 quarters prior to that. So you see a dollar-yen 1-minute chart. You can see on the left-hand side of the chart the response to the news. Right there, yen drop, some yen strength. Not surprising, given that the first reading for fourth quarter GDP for last year was actually a drop. There was actually an estimated contraction. Excuse me, hold on a minute. Guess I'm not used to talking as much anymore. Yeah, there was an estimated contraction in the U.S. economy in the fourth quarter, at least according to the first estimate from the Bureau of Economic Analysis, that far worse forecast 0.1%, and the previous figure from the third quarter of last year of 3.1%. So the initial reaction wasn't surprising. Yen strength, yen's common in a scenario. Japanese yen is seen as a classic safe haven currency. The yen commonly will gain strength when we have poor U.S. economic data. However, look what happened from there. Let me reset the drawing tool. Notice what happened from there. Essentially speaking, the dollar-yen was bought. So initial move down, dollar-yen back 10 minutes later, and never changed. I'm only showing, 90 minutes worth of price action, but I can tell you the dollar-yen didn't do much more than that. So there's one example. And by the way, this isn't the only example of the market buying the dollar-yen when we see yen rallies in the past, actually several weeks and months. Let me show you another example, in this case in response to U.S. GDP. What I'm going to show you is the dollar-yen's response to the third quarter GDP report, the first estimate released on October 26th. News due out in a little more than 5 minutes. Now, in this case, the reaction was just the opposite. What happened was the dollar-yen initially rose. You see the green candle I'm pointing to right now. Dollar-yen spiked higher, not by much, some 10 or 15 pips spike higher in the dollar-yen, and it eventually completely reversed, so up then down. I don't know why, but I suspect this drop here was due to other reasons, not due to GDP. Anyway, so a complete reversal of another reversal, actually more than a reversal of the initial post-news move. And finally, and I see some comments. I'll get to the comments and questions in a moment. I apologize for everyone waiting for my response to that. Here's the dollar-yen's response to the first estimate of second quarter 2012 U.S. GDP. Now, in this case, you got a sustained move for a change. Of course, now bear in mind this was months ago. We're arguably dealing with a different market back then in July of last year versus the market we're dealing with now. I mean, one notable change is a very aggressive easing policy by the Bank of Japan, which was we got hints of that back in November in response to Shinzo Abe's comments. Anyway, I digress a little bit. But you did see back in July on that US GDP report, the dollar-yen spike higher on a slightly better than expected estimate of 1.5% growth. But this is a 1 minute chart. Notice how there was really no feasible way to get into that trade. It spiked higher. What we like to see is something like this: rise, pullback, extension. But there was no pullback there. It made its way higher by some 25, 30 pips. And then went horizontal. And again, what I'm not showing you is responses on the Euro USD to recent US GDP reports, because the Euro USD, as I've seen it, has done little to nothing in response to this report. So, it's this could be a tough one to trade for any of you who are looking to trade this report. Now, of course, if we get a notable surprise, then all bets are off. Maybe there will be a viable trade to be had. Not only on the dollar yen, but perhaps on the Euro USD. Let me catch up with questions here as I drum up we got 3-4 minutes left until the release of the report. I want to show you one more thing, and that's the recent history of the GDP. The consensus forecast is 3.1% quarterly annualized growth in the U.S. So the headline figure, the consensus forecast is 3.1%. Notice the range of analyst estimates between 2.3 and 3.3%. That will be a notable improvement over fourth quarter of last year. Final estimate of 0.4%. And again, the logical reaction, again, whether or not it's going to be a sustained reaction remains to be seen, but the logical reaction would be a better than expected number, yen weakness, worse than expected number, yen strength. In terms of the dollar, well, the dollar hasn't moved that much in response to recent reports, but if we do get a real surprise, the dollar could actually gain, I don't know whether the dollar's going to gain strength in response to a terrible number. We've seen at times on a slightly worse than expected U.S. economic data that the dollar will actually weaken due to increased speculation or perceived higher odds that the Fed will remain accommodative in its monetary policy. In other words, that the odds will be rise in the minds of traders and investors that the Fed will keep QE3 going for a much longer period of time if the U.S. economic data is worse than expected. But we'll assess the market's reaction when we get it. So the euro about 1.3010 as we wait for the report. Yeah, Michael, did you see the report, the article on that? The U.S. is, I think the Bureau of Economic Analysis is changing the way it assesses or measures GDP. It's kind of silly because what it's going to do, it's actually going to, I thought I read it's going to goose GDP by something like 0.3%. Now, I'd like to hope they adjust the numbers, going back, months and years so that you're comparing apples to apples. Thank you, Michael, for the article. So we're going to wait for the report here, see what the market's response is. Focusing especially on dollar-yen chart, dollar-yen 15-minute chart here. Again, focus on dollar-yen, but particularly because of the sensitivity of this pair to news. 97.20 zone looks interesting. There's prospective support for the dollar-yen. Don't know if we'll get there or not in response to news, but that's a possibility. I saw it 97.20, and news is about to come out because of that high and that low. Perhaps there's other reasons for that as well. News should be out. I don't have a figure yet. Let me drum up. 2.5%. That's lower than expected 3%. So 2.5% is the headline number. Remember, the consensus forecast was, well, by some estimates, the consensus forecast was 3%. I had 3.1% for the consensus forecast based on my sources. Anyway, lower than expected number. Lower than expected number. Notice the euro initially did jump up here a little bit, but hasn't reached resistance around 30.45 just yet. Dollar yen did spike down, but dollar yen yet to break below its recent low around 98.15, 98.17. At the moment, I don't really, if you're a trader, I don't really see anything you can do with this. I mean, buying the dollar yen around 98.20 was a very difficult thing to do. You're talking about, placing an order there before the news, and just if you got lucky, it got filled reasonably soon after the news came out. But at this point, it's a kind of a wait and see here. Dollar CAD's still stuck in a trading range, but what's notable about the dollar CAD, it's not saying much yet. Dollar CAD isn't moving that much, but you are seeing a hint here of Canadian dollar weakness. And that's fairly common when you get a worse than expected U.S. economic data. So let me post the numbers here. Hang on. Especially since the reaction thus far is fairly muted. I'm going to take a moment here to post the number. Here you go. Oh, shoot. I just mistakenly posted it to someone else. Let me repost that. Okay, all of you should see the post I just made. There's the headline figure. Yeah, I must say there's at least a little more reaction on the Euro USD than what I've observed in response to recent US GDP releases. I'm zooming in on a 1 minute chart. Prices at about 1.3010 before the news. We jumped to 1.3035. That's a reasonable move. But unless you were really ready for it, perhaps, and I know it's an after-fact call, but it's sort of in the spirit of what I discussed earlier. You could have gone long around 1.3020-ish there, because I remember I discussed before the news that sort of move like this, initial rise, pullback, an extension, sort of a 1, 2, 3, a three-wave impulse pattern. That's what we got in a kind of a micro form on this 1 minute chart here. Initial spike up, pullback, but you really had to be not only ready for that, but rather aggressive, considering how little we've seen the Euro USD move in response to recent US GDP reports. And now that I've turned off the marker, you'll see we're back there around 30.20, and again, I'm not that honestly not that optimistic about any sort of sustained move on the euro right now. While possible, it's let me remind you, the Euro USD has shown mixed price action in response to the past few US GDP releases, and dollar yen yet to break below its recent lows. So at the moment, it's a sort of a spectator sport, unless you took the long earlier. On the euro, that is. Yeah, Salim, Salim, I hope I'm pronouncing your nickname correctly. That's the ultimate question. I don't know. Salim, all I can go on is, well, not all, but much of what I can go on here is history. History. And, how historically has the market this report. And if you look back at the numbers I the headline number versus the actual, I don't consider that a great surprise. Let me take you back to what I showed you earlier. So we got 2.5%. So let me move on this graph here. So again, the consensus forecast was 3.1%. The range of analyst estimates was 2.3 to 3.3%. So in other words, of the analysts or economists surveyed, the range of their estimates was between about 2.3 and 3.3%. We get 2.5. So the actual number was about right here. And the reason I cite analyst estimates were, in my experience and my observation, we're likely to a significant sustained move on pairs like dollar-yen or USD when you get a notable deviation from expectations, when you get, in other words, a notable surprise. Now, if we'd have gotten some, for example, like 4% or 1.5% lower, then maybe we'd see a sustained move on pairs like dollar-yen or euro-USD. But in this case, it's not much of a surprise. I want to look at the Canadian dollar pairs. I mentioned earlier a hint of Canadian dollar weakness as seen on dollar CAD. Going to a profile showing multiple Canadian dollar pairs. Yeah, you see it across the board here. I'm going to freeze these charts. Again, these are all Canadian dollar pairs. Now, I'm only citing the initial reaction. There's certainly no guarantee in my experience, in my observation, there's no guarantee that the Canadian dollar will continue to remain weak, but the initial reaction does make some logical sense. Now, you're facing the same challenge or similar challenge in terms of trading these pairs that you're facing on the likes of dollar-yen and euro-USD. We either have support or resistance to break first before you can justify taking on a trade. But again, we got a green candle on dollar CAD right now. Green on dollar CAD can mean Canadian dollar weakness. We got red on CAD yen. But CAD yen like yet to break below support. Recent lows around 96.30ish on CAD yen. CAD yen yet to break below that. So trading classic trading 101 type of rule is you don't sell at support. And maybe you sell at a previous support after support's been broken, but support has not been broken on CAD yen yet, so you got to wait. Green candle on Aussie CAD, perhaps due to some Canadian dollar weakness there. Euro CAD up, pound CAD up, CAD Swissy down, all in the direction of Canadian dollar weakness. Now, again, the question is, will this Canadian dollar weakness extend? It remains to be seen. CAD yen could be an interesting one to consider if you're looking to trade this news, if only because this pair would seem to be the perfect storm if there were going to be one amongst the major pairs today. Now, why is that? Well, think about the implications of this news and how different major currencies respond to, in this case, a worse than expected U.S. GDP reading. Japanese yen is a classic safe haven currency. Japanese yen, as I mentioned earlier, tends to gain strength in response to poor U.S. economic data. And as I've just shown you, and we've seen this kind of response countless times before, the Canadian dollar has tended to weaken in response to U.S. economic data. So Canadian dollar weakness plus Japanese yen strength, certainly means down for the CAD yen. Unfortunately, at least as of yet, we're not seeing a sustained break below recent lows here on CAD yen. I got some more lines in this chart. Yeah, notice how even if we break below recent lows established a few hours ago, this is a CAD yen 4-hour chart. Notice we've got 95.80 contend with. But maybe there's going to be a case for a short if the CAD yen continues down. Maybe there's going to be a case for a short later around, retest of 96.35 or 96.30. Targeting maybe 95.80. Wouldn't be much, but could be something there. Yeah, Michael mentions all the equity markets down in response to that. Yeah, that makes some sense. Yeah, let's take a look at my market overview profile. Sort of drop in the DAX, or not the DAX, but the S&P futures here, but not much. Not much. Notice how the pound retaining its strength from yesterday following a better than expected UK GDP reading released from yesterday's London session. So at the moment, the only thing that I've seen here was a quick entry, relatively quick, within the 3 minutes after the news. Although, perhaps one of you took a second chance here. So I referred to a long trade entry around 30.18, 30.20ish there. Perhaps one of you took a second chance there. And the dollar is retaining its weak tone, but yet to make a new post-news high. And yes, we have seen on plenty of occasions the Euro-USD reverse any post-news move, and actually more than reverse, completely go the opposite way. So a drop back down to 1.30, not outside of the realm of possibility. Cable interesting because it's just approached 1.55. I've got a horizontal bright red line at 1.55 on cable here. Oh, sorry about that chart. That daily chart of cable is a mess. Used this chart too many times before in live coaching sessions. Now, you may be thinking, why not look to short cable? Well, it's a possibility, but let's look at the British pound against all the major currencies here. Yeah, Michael mentions the strong Swiss franc. Swiss franc, it's not the safe haven currency it used to be, but we do see at times in response to poor economic data out of a major economy like the U.S. that sometimes the Swiss franc will firm up a bit. Yeah, so I've got 15-minute candles. I've got 15-minute charts on the pound pairs here, and it's a bit of a mixed bag. You do see a general theme here on at least some of the British pound pairs. Euro pound's been more down than up. That could be due in part to some British pound strength. Pound dollar's been up of late. Pound Aussie been up here. Pound CAD up. Of course, the pound CAD spike up likely due to the Canadian dollar weakness I mentioned earlier. And there's the Swiss franc strength against the British pound that Michael just mentioned. And, of course, the yen's a bit firmed a bit in response to the poor U.S. economic data. So not surprising the pound yen's down. If there's a yen move to be faded, in other words, anyone seeking to buy a yen cross on a dip, pound yen does look interesting. Around the 152 zone. But again, the reason for that, the reason for doing so, number one, it's psychological level around 152. Number two, that we've seen some strength in the British pound more than not since the release of yesterday's UK GDP report. And again, third, as we discussed earlier, the Japanese yen has been sold on rallies. In other words, the yen crosses, by and large, have flipped on multiple occasions when we've seen the yen rally for one reason or another. Now, certainly, I know no one else can guarantee you that that a pair like the pound yen will flip from down to up somewhere near 152. But for anyone seeking a, if anything, a slightly more aggressive trade like that, then that would seem to be a viable candidate. My focus here, I just want to make sure you guys understand the reasoning behind that. Now, whether it works or not, I can't guarantee that. No one can. But does anyone see the logic behind, if you're going to take such a trade, the logic behind looking to buy a pair like pound yen on dip? Again, that's not a trade call. It's a logic that I wanted to convey there. Yeah, Nika cites 96 as support. That's quite a ways down from 98. But I won't disagree with you there based on the a look at the charts. By the way, FX Street, I don't know if you hear, but I swear at one time, this might have been days ago, I thought at one time that this webinar was scheduled to end now. I thought this was supposed to be an 8 a.m. to 8:45 a.m. New York time webinar. I don't know, maybe I misperceived that, but I swear that was the case, and I said it because I'm at the point where I'm really going to have to leave very soon, if not like in just a minute from now. I made a commitment based on being able to finish this webinar at 8:45 a.m. Again, maybe I missaw it, but I swore I saw this webinar at one time was scheduled to start at 8 a.m. New York time. And whether I'm right or wrong, it doesn't matter. The point is, I am going to have to wrap this up soon. Looking at some of the comments here, I don't think I've missed anything else. Holy cow, nice crown. Let's go back to where we started, which is my view of some USD pairs. We'll see what's happened here. Again, the Euro-USD yet to reach that next logical area of resistance around 1.3045. But for anyone who took a scalp long, I suppose there's hope yet for that trade. Now, historically speaking, the Euro-USD has not shown a tendency to extend its post-news move in response to recent US GDP reports. Perhaps today is an exception. One reason why today might be an exception, it may not have so much to do with the US GDP report as it does to do with the euro finding support yet again at 1.30. Note the dollar yen did extend lower, but not by much. I would not call this. I mean, it looks like someone could define that as officially a break. I'm not ready to call this a break of support. Recent lows there around 98.20. Yeah, we're a bit below. We got a bit below 98.20, but we're so close to a psychological level. Yen crosses shown a long history of respecting psychological levels or zones, and again, the dollar yen has been shown a recent history, extensively a history of being bought on dips. So anyone seeing this as a break of support and looking to sell this pair, be very, very, very careful. Remember what I showed you earlier? The dollar yen has not shown a tendency for months now to extend its initial post-news move in response to US GDP. Yeah, and thank you to FX Street for making this event possible. And for anyone who wants to contact me for any reason whatsoever, maybe you had a question that I didn't answer, and I apologize if I missed your question. If you had just wanted to catch up, and if you haven't chatted with me in a while, maybe you're a former FX boot camper, maybe you're interested in private mentoring, whatever the case, you can reach me at the following email address. And if you want to keep tabs on things like my tweets on Twitter or blog posts, one portal or kind of place you can go to keep tabs on everything I'm posting on the internet anywhere is, let me just post that link. You can go there. Personal webpage there. Folks, thank you very much. And again, thank you to FX Trading for making this event possible. Appreciate your time and your participation. And good to see some old names as well. Have a great day, folks. Cheers.